I think we'd have to call it volatile, to say the least. And
Ben and Brun, welcome back to Ducoscopy TV. A pleasure to see you once again.
Lovely to see you, Natalie.
Thank you so much. Okay, so let's jump straight in. And after 2 months of gains and a positive start to May, the Australian Stock Exchange is in the black, something which at the beginning of the year I don't think we would have been saying. How would you characterise this first half of the year so far in terms of trading sentiment?
I think we'd have to call it volatile, to say the least. And we're just having a little chat off camera there. That's what we've been seeing on an intraday sort of session. That's been sort of stock standard for the Australian share market. We're seeing strong volumes, we're seeing big trading ranges, and we're seeing a significant move higher. Now, we hit an inflection point, and I think, what we saw last night, at least certainly out of the Federal Reserve, we saw a hotter than expected inflation gauge. Now, that has raised the flag of potential rate hikes again out of the US. So where this, we have that old adage, sell in May and go away. No sign of it yet, but there's the potential moves that we could start to see a little bit of a pullback. But we've had a sort of, using round figures, 12-13% rally since February. So it's been a good comeback for the market, and that's been based on pretty much all sectors. We've seen a strong moves higher in the energy sector. We've seen strong moves higher in the materials sector. The banks have just come out of profit reporting season. They all came out of it with, I don't know, there's some uncertainties there about bad and doubtful debts moving forward. They've all paid their dividends now as well. So I think the scary thing or the concerning thing is we've seen moves higher since February, but it's been on no earnings per share growth. So we've seen moves higher when it comes to multiple and price to earnings ratios. So there's some concerns there, or I've certainly got some concerns at least. So it's going to be an intriguing. It's going to be an intriguing next couple of months, and of course, selling May and go away is based on what happens after the banks pay their dividends. They've all paid their dividends now. So where is this growth going to come from here, and what's the Fed going to do? There's a lot of uncertainty, and of course, on the election here in Australia. So, to my mind, we're sailing into a few headwinds.
Well, we have, as you mentioned, the US Fed, we have locally, we have the election also. Another one of those key drivers has been China, obviously, and earlier in the year that really caused some damage locally. We saw some weak Chinese figures on the weekend, but the local share market sort of managed to shake that off a little bit. Does that mean that, are we seeing China as being less of a driving force now?
I think we are. Certainly early in the year, that's where you're right. That's where a lot of the concern was coming from. Now we've had... just recently, if we look quarter on quarter, we've certainly seen retail sales sort of, it's just showing some consumer numbers that, perhaps aren't where, or not trending perhaps in the right direction, whereas industrial production, quarter on quarter, hopefully trending in the right direction. And then we're talking about credit growth as well, and that's been earmarked as what we want to see. To sort of get a cyclical upswing in the Chinese economy, but it's there's a lot of China bears at the moment, and I was very pleased to hear the PBOC come out with some stimulus measures and talk about defending growth numbers of around about 6.5%. So that potentially might sort of see some further stimulus come out of China if the numbers start to trend towards 6.5. But you are right, the numbers that we have seen, while not shooting the lights out, if they had been released in January and February, everyone would have been panic stations all round. So again, an inflection point in China, and that's obviously where we're going to be taking our cues from in the short term. But I'd just love to see them come out and say what they've said, that it's a big sigh of relief. They're going to be defending around 6.5% growth level. So happy days, I think, for China as it stands right now.
Now, you already touched on the energy sector earlier, and we do have week in, week out, losses dragged by the energy sector, gains pushed by the energy sector. It's really dominated that roller coaster feel that we've had this year, and a lot of it coming back to volatility has been pegged to those moves in oil prices. Are we likely to see that peg attachment to market performance and oil prices likely to come off in the near future?
Unfortunately, probably not. It's a little bit of a pause for thought sort of factor for mine, at least. A lot of the stocks that we see in our energy sector domestically, it's been flagged that we're already pricing in an oil price of around $60, $65 a barrel moving out into next year. Now, we've seen moves higher. It's going to be intriguing to see if we can get a jump up over $50 a barrel where it stands right now, in a very positive report from Goldman Sachs, interestingly flagging that we could be seeing the end of the supply glut. So there's a lot of moving parts, but still, not unusual to see a 5% trading range in oil markets pretty much every night of the week. So I would brace ourselves for volatility. I think that we've had a good run up once again. OPEC's made absolutely no moves, and to my mind, there's nothing that I have seen that makes us think that wow, the supply glut is all over. I mean, even though if it's sort of if there's signals there that moving forward we might see that, that's great. The other half of the equation, of course, is demand. And where's that demand going to come from? We want to see it come significantly from the US, we want to see it significantly come from China, and we might like to see it come from somewhere like India as well. But that is a work in progress. We've seen some good moves higher. Hopefully a continuation of that will follow.
So what then are some of the stocks that are of interest to you at the moment? What are some of your buy sells, your stock picks and your stock put back downs?
Well, we've come out of bank reporting season. I've still got a little bit of a question mark on what's happening with the banks, and I mean that's the engine room. That's the real driver of the Australian share market, is the financials. So I'm not convinced what we're seeing that's going to be some sort of sustainable growth coming out of the banks, and that's what it all boils down to, growth. Where's that going to come from? Obviously, we're going to see that in terms of yield moving forward as well. That's a big driver for yield. So my old friend is the healthcare space, and I think that we've seen that it's probably been the best performing sector coming out of the GFC. So the healthcare space is where I'd like to is where I'm sort of looking for some further gains there.
Ben, many thanks for the update. Always a pleasure.
Thank you, Natalie.
That was Ben Brun there of OptionsXpress giving us his market insights. Sadly, that's all we've got time for right now. I'm Natalie MacDonald. You've been watching Sydney Direct on Dukascopy TV. Goodbye for now.